Good evening, ladies and gentlemen. It is Thursday, the 2nd of June, 2022. Welcome to Hindsight. We're going to look at one of the better trades that we've taken the last few weeks, and that's because, well, May and June tend to be pretty low liquidity and pretty slim pickings on the markets in this time of year. It's end of financial year, and it's a cyclical sort of thing where the liquidity kind of tapers off, particularly in the micro cap end. So we're going to take a look at a more larger cap stock, and that's ORG, or Origin Energy. Most of you are aware of what happened the other day, and that's the 14-15% drop that happened on this roughly $13 billion market cap company. So what I want to look at is the broader idea technically and the broader idea fundamentally of what happened. So something you may not have considered and might change the way you think when you trade in the future. So I want to dive into that. First, we're going to look at the stock technically. We can see that it's on an uptrend. It's a pretty obvious uptrend. And why this is important for this trade and why it's sort of added to the conviction of this short trade is when a stock comes up with unexpected negative news and a stock is trading at its highs on an uptrend, that amplifies the negative move, or rather it tends to amplify the negative move on the day. So one way to look at a stock, and this is kind of my perspective on it, is if a stock is trading at $7, that's not necessarily the value of the company on that particular day, but rather it builds in future performance as well. So if a stock is uptrending in this example and it's at $7, people are buying in anticipation of obviously making a profit. They intend that the stock is going to go higher. They expect better performance fundamentally, whether it's financials or otherwise. They expect just generally better performance. So $7 doesn't mean this company's worth $7. That's what people pay for it, but they're expecting better performance. Hence why a stock, when it brings out negative news, trading at the highs in an uptrend, amplifies the downside move, because it erases that idea that the company is going to be performing better in the future. I mean, that doesn't mean that it can't, but it's just a lot more difficult now because there's less certainty in that decision, in that trading idea. So not only do you have to factor in the negative impact, but you have to kind of add on a bit more negativity because you've got to wipe off the positivity that people are having of the future, right? I hope that makes some sense. So from a technical perspective, I love it when a company is trading at its highs or near its highs and a negative announcement comes out. So to give you just a rough idea of what I mean, if a stock is like this, let's say it's trading at $4.70 and it's uptrending, it's come off, and then the company has bad news or negative news, whether it's financial or otherwise, the stock might gap down, obviously like any bad news event typically would, but then there's a higher likelihood that it can rally. Maybe it gaps down too much. Maybe it gaps down 6%. And then the market goes, oh, hold on. We've sold down from $6.40 down to $4.30. And then some people might see that as a bargain and start buying up. And that's why you see a lot of stocks with negative news, they gap down too much and they rally. So it's a little bit tricky on trading negative news on a negative or a downswing of a stock. Whereas in this case, it was nice because it was uptrending and then the negative news hit. So let's take a look at what the news was. And the other thing I also want to point out, and this is what really, really made it good, was that the news came out at 9:54 in the morning. Origin can't trade earlier than 10:06 in the morning, or 10:06 and 30 seconds. That's the earliest time the stock can open. So the market had about 12 minutes to react to this news. So really, really late in producing the news to the market. So we open up the announcement and we come down to, by the way, this is a guidance announcement as well, an update on guidance, and these typically move companies quite a fair bit, particularly in the stocks that are greater than 1 billion market cap, especially if they move like 20% or something like that. It's pretty significant, and particularly when it affects EBITDA as well. So we have here an underlying EBITDA for the consolidated group to be around the midpoint of what they originally anticipated. So that doesn't really change anything. And, sorry, might I add, one of the first sentences in this document is, there is currently extreme volatility across commodity markets. So from the get-go, this is a pretty damn negative document. Although there's a little bit of positivity here. Integrated gas and corporate underlying EBITDA expected to be higher from 1.5 to 1.6, moved to 1.7 to 1.8. So that's a little bit of positivity. And then you're met with cash distribution to Origin, net of oil hedging loss to be expected to be around 1.4 billion compared to the original guidance of 1.1. So that kind of negates that idea of any positivity. And what we end up having is, again, more challenges, more negativity. Situation has deteriorated significantly in recent weeks with under delivery of contracted coal compared to expectations. So real sort of negativity in this entire paragraph. And it gets even worse when you see that the energy market's underlying EBITDA drops 20%, right? From 450 to 600 down to 310 to 460. That's a huge drop, right? Percentage-wise, that's a big drop. Now, that's all well and negative, so it's good for us short traders. And then we scroll down a little bit further, and to get to the most important aspect of this announcement is this part here. Due to the factors outlined above, and you'll feel free to read this component here, but due to the outlined factors above, this is the part that's really important. There's a very high degree of uncertainty. Markets, particularly, or rather stocks that are trading at high market caps on ASX, don't like uncertainty, right? That's a terrible word to use. And it's uncertainty around the range of earnings outcomes for 2023 financial year. So they've withdrawn all guidance. That is awful. A company that cannot provide guidance in the future at this market cap is just awful. I mean, the sentiment around all of this is super negative. So you've got big drop in EBITDA. You've got just an all-around super negative document. The way that it reads is super negative. So the sentiment is poor, and then they're withdrawing guidance. Like, those three things are just absolute killers for the stock. So we look at the 1 minute chart, and what I want to point out is just how little it gapped down. Now let's be honest, 6% isn't that bad considering the news. So if we bring up the ruler from the last traded price, it opened at negative 6.5%. And then we've got an EBITDA sitting around somewhere at negative 20%. And then you've just got to, erase those future expectations of better performing stock. And then you've got the financial year 23 not being withdrawn for guidance. I mean, these things scream out way worse than a 6.5% drop. And so from here, it was a match on short, and then just wait and see what was happening on this candle here. That was a little bit confusing. It was kind of like, what's happening? And then it started to collapse again, come off, and then it was really clearly a break of range. So it was just like that was effectively your range. If this went green a little bit more, then it would have been a higher range. But ultimately, it's the first candle, and then whichever direction's the stock going. So if this decides to go up more and then pull back, then that becomes the range. But in this case, it was basically the entire range was defined in two candles. So red, green, and just straight away back to red. So that becomes the range. And then just it's a matter of, does it double bottom and then break the range? And in this case, it was just straight murder, and rightfully so. And a large part of why this gap down at 6.5% instead of, say, 8 or 10% is largely due to the fact that this had news at 9:54 in the morning. Like, that is a super late announcement. A lot of traders wouldn't have spotted this. I got lucky because someone on my private Discord pointed it out to us, and I managed to hop on because otherwise I wouldn't have spotted it. I'm too busy setting up my tickets for other trades. I'm too busy preparing. I've got like all my news announcements. I've got my watch list. I'm preparing to actually execute for the day. And then this comes out just as I'm preparing. So I'm lucky that was pointed out to me by my community. And pieced it all together pretty quickly, negative sentiment, and just wait for the breakdown really. So a little bit match short, and then waited for this level here to just, that was very weak. There was kind of a reload there that was happening, and just waited for it to come off. And then I had like a serious bias on this stock. You know, I would have heavily shorted as it was going up. I probably would have front-sided. I don't really like front-siding that much, but on this one, I was very convinced of the direction. And for all the reasons that I've mentioned above. So, you know, once the breakdown happens, the break of range, and it's just add on short and just let it ride. One thing I want to point out as to, you know, why I didn't hold longer than 10:30 in the morning, and it's unfortunate I missed this little move here. I mean, I scalped it, but I caught the bulk of the move to about 10, just before 10:30. There's a couple of reasons for that. First is the daily range. That's something that sort of really puts me off, is just seeing how large the move is, and that was to about 590. So the candle, this red candle was, I think it was 580. 587-ish. So that was the red candle there up to that point in time. And that all happened in the space of half an hour. So keep in mind, this monster of a move happened in the first half hour. So of course, that doesn't mean there's not more selling to come. Of course there was. But I caught the bulk of the move, closed it out, and called it a day. And again, that comes down to the fact that the range was so large compared to every other day. So the average, or the ATR rather, it was such a large range that I couldn't see it going much further. And if it was, there was less and less money to be made, because a bounce has to happen. It just does. And the odd thing about this bounce, if we bring up the VWAP, sorry, the second reason to sell as well is 10:30 is a timing that I have. When something trends to the downside for a larger cap stock or a mid cap stock, it tends to trend for half an hour. And then if it's really bad, or if it hasn't had a sharp decline or a massive range, then it tends to go to 10:45 and sometimes 11 o'clock. So those are my sort of three timings that I have. And for micro caps, it's 10:15 because moves happen a lot quicker. So what we end up having is a move that actually goes right through VWAP, which is really actually confusing. So I was kind of watching this stock, and there was actually large volumes. If I just bring up the intraday volumes, there was actually a pretty significant push that happened towards VWAP. You can see it touches VWAP and gets rejected, but it only rejects on that one candle. And this is the 1 minute chart. And then it sort of comes down and then starts heading back up. And then it sort of rejects a little bit again. But the point is, the stock doesn't just hit VWAP and reject, which is kind of what you want to see ideally when it touches VWAP, particularly on a really highly liquid stock and something that's moved with a lot of volatility as well. That's the kind of reaction you want to see. So this actually was really confusing. Didn't take the trade, was just watching. It was my opinion that this thing was always going to just like sit near the lows or grind its way down to the lows at some point. So it's 11:15. And it's just trading oddly above VWAP. I was expecting a little bit of a fake out, maybe hit this little level here, and it's not much of a level, to be honest. 611. It kind of hits that level, comes back, and just goes, no, we're heading to the upside. So that's a little bit confusing. I honestly don't know what's caused this momentum to this point in time. It's unusual. But anyway, it comes back down to reality, respects fundamentals, and it just comes right through VWAP. Doesn't bounce off it, collapses through, retests VWAP, and comes right back down. It kind of just does what all other large cap stocks with bad news do, and that's just sell off and just make its way down. Now, unfortunately, I didn't catch either the upswing or the downswing. I have a bad habit when I make good coin in the morning. I tend to give back quite a fair bit in the afternoon. So it's a habit that I'm trying to correct. So take my morning profits and leave it alone. But it certainly was interesting just to watch it trade for the day and see how unusual it was, because this whole price action here everything above VWAP was really confusing. But in the end, the stock did what I think it should have, and that's just sell off for the day. So I hope there was at least some insight that you found there from a broader perspective of the trade. And I hope you guys got something out of it. Otherwise, please do feel free to like and subscribe. I'd appreciate that very much. And guys, I'll catch you in the next video. Cheers.